So I recently dropped a video closer to the Federal Reserve's most recent FOMC meeting, which at the time of this recording, it is March 31st. The video is likely going to be uploaded sometime in the first week of April. My video was released sometime after the 22nd or 21st or 22nd of the Fed's FOMC meeting. At the time of the video when I recorded it, one of the two parts that I recorded went on a little bit of a rant or a tangent about a potential Fed pivot, that being priced in and expected in the marketplace by the market, the stock market itself, and the Wall Street rather, and the analysts all over the economy, suspecting that the Federal Reserve will be forced to pivot before 2023 is out. My initial response in that video was that things would go haywire and assets will start to go through the roof. I'm going to actually correct myself a little bit and shoot a video to counter that and explain in a more broken down fashion so you can position yourself financially around what a Fed pivot could look like if they are forced to cut before 2023 is out. I'm going to give a little perspective, and hopefully this will allow you to make the proper financial moves so you can up-level yourself and not get caught in a crazy tidal wave. We're going to cover it in this video. This is JP from Blueprint for Prosperity, helping you to increase your net worth through relationship banking, maximizing your borrowing capacity, proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity. Our economy is based on borrowing and spending. Point blank, period. That's it. Our economy is based on borrowing and spending. That is for individuals, corporations, and the government. All of the same. Every single layer of our economy is based on borrowing and spending. It's very little production in comparison to the dependency on borrowing and spending in our economy. What does that mean? That means that our economy is extremely delicate around human psychology. Human psychology, meaning that our confidence in the system, our confidence in the financial system affects our comfort with borrowing or investing. And it does the same thing to companies and corporations. It's all based on confidence. And that confidence is heavily, navigated or, influenced by our monetary system and those who steer it, i.e. the federal government and the Federal Reserve through fiscal policy and monetary policy. So this leads to the Fed pivot concept. The Fed's pivoting prior to inflation being reduced effectively, meaning before 2023 is out, because the Fed's own admission is that inflation will not be down to 2% this calendar year. They're already projecting it to be somewhere in the 3% to 4% range, which is down significantly from its high, but still not down enough to be comfortable by their metrics. So if the Fed has to pivot before 2023 is out, that means by default that they've had to pivot before inflation has been cured. Our confidence as individuals, small companies, medium, large corporations is going to be rocked to its core if that happens, even though it's expected by the financial market that they will have to. And there will be segments of our economy that will celebrate and take advantage of massive opportunities, sure. But most of us that are dealing with the effects of the Fed's monetary policy on the ground and companies who are caught in the middle of it, even certain investment markets are going to experience chaos on some level in many cases, because this means that if the Federal Reserve has to cut rates before 2023 is out, this means if inflation is not cured already, that it's likely to go absolutely haywire. And though inflation usually takes many assets with it, the damage it does to the underlying economy also cuts the legs beneath that growth in the same time. Because inflation is continuing to erode the purchasing power, which spending is one of the most important parts of our economy. And if you are terrified to borrow or spend money because inflation is going through the roof and you can't afford to go out and buy the things you're used to buying, well, that kills spending. And then the inflationary effects have potentially have a dangerous effect on the lending system and the borrowing capacity as well. It's just a domino effect of how this can take place in the economy. So I want to stand corrected in saying that assets are going to go through the roof and things are going to be crazy just because things are going to go through the roof. They will, in a sense of speaking. But things will get bad if that happens, because the Fed will have to stop putting out one fire to try to put out another one. And this one is still burning. The process of putting this fire out is going to further increase this fire, if we're going to use such an analogy. The Federal Reserve trying to catch a falling knife with stimulating the economy for whatever reasons, or lowering the interest rates or cutting interest rates to salvage or stem the tide on the collapsing banking system. Any motivation that it has to cut rates prematurely will literally likely send inflation through the roof. There are sectors of the inflation basket that are still not going down, even with the Fed compressing interest rates while raising them. We have food growth prices in some sectors of the energy market that are still going up as the Federal Reserve's rates are going up and pressing down on these markets. It's still not working that well around the entire basket of inflation. So you can imagine, not only if they pause, but if they pivot and cut rates, this could be a serious problem for inflation. And even though assets may initially start to go through the roof, and asset markets could see great appreciation, and the housing market could blow up because dropped interest rates mean that affordability is going to go up, and a bunch of buyers are going to hit the market. Inventory in real estate's already low, so on and so forth. Companies being able to get back to borrowing money cheaply so they can start growing again, and that's shooting the stock market up. The list goes on. The crypto market's probably going to be crazy. It's going to be extremely damaging if this happens. The Federal Reserve's in a very tough spot because it is realistic that they might have to. If the financial banking system cannot sustain itself healthy enough, and we have any significant collapses here or even abroad, places like Europe are experiencing the same thing, and our banking systems are interconnected enough where this could cause problems at home. If this happens and the Federal Reserve sees a need to pivot prematurely, it is going to be chaotic. And it's going to be unhealthy for the long-term stability of our financial markets. And again, going back to the head of this video, it's going to crush confidence for a lot of people. Because yes, asset markets are going to go crazy and some people are going to make a lot of money. But most people on Main Street are going to still have to deal with those crazy egg prices and bread prices and fruit, gas, and the list goes on. Day-to-day living is going to shoot through the roof. And at that point in time, can the Federal Reserve hop back over and try to fight inflation? Unlikely. It's going to be bad, and confidence is going to be terrible because the Federal Reserve is going to be at that point in time not able to stop whatever problem with the economy falling apart or banking system falling apart, and they're also going to lose their grip on inflation. It's going to be bad. If in consumer confidence, corporate confidence drops, we can see major problems in this economy. And there may be nowhere safe other than possibly the resource sector and precious metals. That could be one of the only areas that can see enough stability or even growth just due to demand of resources that we can't do without. Other than that, the real estate market, stock market, potentially crypto market could see crazy swings or very unhealthy spikes that can make them very dangerous to be invested in. So I wanted to stand corrected when I said what I said, because I realized that it could have been a little premature and short-sighted. And as a financial educator, anybody who's listening to my content is consuming and picking up on this. And I likely have some influence on how you're seeing these topics covered in these videos. And I want to do my best to be genuine, honest, and give you quality to build your thesis off of or add to your current position around whatever financial topic is being covered. And it was a bit immature or premature of me to say that assets are just going to go up because the Fed cuts its rates. That's not the total picture, and I wanted to clarify that in this video. I want you guys to be in the proper position if this happens. You need to be in the best position possible by trying to be stable with employment as you can be. Having cash savings is going to be important. And again, to be honest, either you're an existing owner of the right stocks or the right real estate, or you have precious metals in your coffers, and you're stacking that up, or invested in that in some way, and can potentially see some great gains there. But it's not going to be a safe environment for us economically or investment wise if the Federal Reserve prematurely has to cut rates. And I hope in this video I broke down and made some sense as to why it's not going to be a safe place in many places. So I want you guys to leave your comments down below. Let me know what you think. Let me know what you think about the position that the Fed is in and how they could end up being forced to pivot and what that could mean for the market. What position are you in? Are you already owning the right assets, or are you trying to get in position? Comment with those things down below and let us know. Like the video, subscribe to the channel. I'm going to keep dropping these gems on a daily basis, as you can see. As always, I want y'all to stay focused, stay in motion. I'll see y'all soon.